depreciation, we're looking at adjustment on provision for depreciation on non-current assets. Provision for depreciation on non-current assets. If you look at the question, under depreciation, there was provision for depreciation on motor vehicle at 5% on cost. Provision for depreciation on motor vehicle 5% on cost. Mind you, when I was taking the adjustments class, I told you that if you say cost, it also means the straight line method. So here, depreciation on motor vehicle was strictly on cost. So the cost is the actual amount given in the trial balance. If you look at your trial balance, the motor vehicle cost was 258,750 naira, and the depreciation is 5% on cost. So it's just for you to work the 5% of the cost of the motor vehicle, then you can get the depreciation, and that is all. In this case, 5% of 258,750 give you 12,938 naira, which is what we charge as operating expenses under profit or loss statement. It is straightforward. Here, if depreciation is on cost, it's just for you to work the percentage on the cost of the assets given in the trial balance. What we get become the expenses, and there's nothing about that. That is straightforward as possible. They can also refer as straight line method. So if it says straight line method, it is still based on cost. So don't be confused whatsoever. Let's go to the second here, the second item here. We are talking of provision, what is called accumulated depreciation. Here too, if you work the current year depreciation, giving additional information, if you go to the trial balance, quickly go there, you discover that there was accumulated depreciation of motor vehicle of 2,000 naira, which is the initial depreciation brought forward from the previous year. And the current year depreciation is 12,938 naira. So you now add the one given in the trial balance, the previous year accumulated depreciation, added to the current year depreciation, we give you 14,938 naira. This is the amount that we use in statement of financial position. While the current depreciation is used as an operating expenses, the total of the initial accumulated depreciation plus the current one will be used as accumulated depreciation in the statement of financial position. I'm repeating that it is only the current year depreciation that is used as an operating expenses. Don't forget. We're going to the statement of financial position, the accumulated depreciation given in the trial balance plus the current year depreciation that added together, the total amount is now used under statement of financial position. Don't forget. Then we go to the second non-current assets that have depreciation. It was furniture and fittings. Furniture and fittings was having a depreciation of 10%. But here it was not based on cost. It was based on the reducing balance method, or what you call the written down value. Here it was on cost, but here it is based on the written down value, or what you call the reducing balance method. So how do you work it out? Here you work 10%, but you cannot work 10% direct on cost. You not get it right. The cost of furniture and fittings was 111,240. If you work the 10% direct on the cost, as in the case of motor vehicle, mind you, the answer will be wrong. So what do? First, you take the accumulated depreciation of furniture given in the trial, which was the previous accumulated depreciation, subtract it from the cost of the furniture and fittings to get what is called the written down value in the current year. They now work the percentage on the balance for you to get the correct answer. And that is why we subtract 3,000 from the 111,240 naira and work the 10% of the balance to get 10,824 naira, which is the depreciation that will be charged as operating expenses as in the case of motor vehicle. Then you must also have to determine the depreciation that will charge in statement of financial position. Just like in the case of motor vehicle, you go and pick the accumulated depreciation of furniture and fittings, given the trial balance, add it with the one you calculate in the current year entry, then the total of 13,824 124 naira is what you use as accumulated depreciation under statement of financial position. This is how it is treated. Mind you, this can also be referred to as a written down value, or what we refer to as the reducing balance method. So any of the language, you apply this method and it will get it right. Let's quickly go to the next adjustment. The next adjustment here is revaluation of freehold property. Revaluation of freehold property. How do you handle it? Revaluation is for you to determine whether we have what is called revaluation surplus or increase or decrease, as the case may be. Now, the initial value of freehold property was 150,000. But if you go down the additional information, it is clear that freehold property was revalued up to 200,000. Up to 200,000. Then the difference between the initial value of freehold property, which is 150,000, and 200,000 will give you 50,000. So practically it means if the current value of freehold property is 200,000, then it means there was a revaluation of 50,000. That is 200,000 minus 150 will give you 50,000. 50,000 become what is called revaluation. And this is what is called revaluation surplus or revaluation increase. So this will be added to the net profit to give you what is called total comprehensive income. So this will be used in the statement of financial position, 200,000, while the 50,000 will be added to net profit to give you what is called total comprehensive income. If it's a decrease, you treat it as such. You deduct it from net profit, and you also use it in the statement of financial position appropriately. Let's go to the next segment. The next segment is what most lenders always find it difficult. How to get the final value of account receivable. Mind you, account receivable was affected by bad debt, the current bad debt. Account receivable was also affected by expected credit losses, allowances for expected credit losses. Account receivable was also affected by allowances for discount allowable. So how do you handle it at the end of the year to get the final value that will be used as account receivable in statement of financial position? The journey is very clear, as we can see. First, you pick the actual amount of receivable given in the question, that is the actual amount that customers were owing, given in the trial balance, that is the current year owing, which is 201,600. Then first, deduct bad debts. This is bad debts given in additional info, which is the current bad debt or additional bad debt. Deduct it from the value of account receivable. Then you now get 200,600. But this is not enough. You have to still deduct the allowances for expected credit losses for the current year, not the previous year, as I'm still emphasizing. The current year allowances, which was calculated at 4,012 naira. So if you deduct 4,012 naira from 200,600, you now get 196,588 naira. That is still not enough because there was also allowances for discount allowable in the actual information created in the current year. The amount was calculated, as you can see over there, and the answer was 1,966 naira. That too will be deducted from the value of account receivable. Then the final amount of account receivable that we charge in the statement of financial position become 194,622 naira. So this is how account receivable is treated in statement of financial position. You deduct all this, and in case it is only bad debt, this is what will be used. If it's only bad debt and expected losses, this amount that we use. If all the three elements are found, this will be the final answer that will be used in statement of financial position. And that's why I promise you that if you follow up with my solution, you discover that I'm trying to bring areas whereby most lenders find it difficult. These are the common standards that you see in examination. So if you're able to follow up, mind you don't have any issue in solving such questions to balance as far as financial statement of a sole trader is concerned. So this is how the adjustment will be handled. If you follow me up, you don't have any issue in handling the common adjustment that you see in questions or even practical life situation. The next thing is for us to present this adjustment via the other items in statement of profit or loss and other comprehensive income and statement of financial position. Don't forget to like my video, comment and share so that the knowledge of accounting will go to the lowest level so that all learners will be able to appreciate how adjustments are handled practically and they also used in the respective financial position. I remain chartered, your accounting tutor.